Today is July 14th, 2016. This is your training video for today. I have quite a bit to go over today because there was a lot that happened in London, there was a lot that happened in Asia, and there was a little bit that happened here in the New York session today. And there's some very, very crucial points that I need to drive home today because there was some really interesting setups that occurred overnight. So it's pretty important that you catch on to these little things because it's the little things that really would have saved your butt last night on some of these trades. So let me go over them. The first one we're going to start off with today is going to be the odd New Zealand, the M30 chart. Okay, if you remember a couple days ago, I had mentioned there were two levels on my charts that I was willing to trade off of. It would be this one right here where I've got two green lines, and then I've got a level down here which I've got the one green line. Even going to the 4-hour time frame, you can see this is a major pivot in the market. It was hit here almost. It was hit here and bounced, here and bounced. So this is a major pivot in the market. This is an alternate low down here, so you've got to go back really far to get a lower low, all the way to the daily, in fact. So this is a major level on the daily chart, or the H4 chart, but we were trying to trade it on the M30 chart. So these are my two levels that I had mentioned earlier in the week. This is a really nice consolidation top. You had a strong move off of it, and then a retest of the level. So last night at, let's see, this was 7:30, so this would have been during the Asia session before London. You had a huge fall on the New Zealand dollar, which I've been anticipating, and it pushed the odd New Zealand through the roof. And so this is the trade setup. My entry would have been, I've got a couple of them here. You've got some tops here, and then you have the ultimate top right here. So this is your level to short. The one thing I want to do, though, is I want to take this to the offline chart to show you what it looked like at the time. Okay, there you go. This is what your level looked like at the time. You had a nice double top, and we were half, 1.5, 2.5, 3.5. We were barely 4 bars from the moving average, so this did qualify as a trade setup. So you could have entered short up here at 105.45 and 105.50 were my levels on this. Your spread here for each grid bar, 103.97 to 104.20. You had a 23 pip spread for one grid bar. So 23 times 2 is 46. You want your stop loss to be 46 pips above the high. So your high over here was 105.49. So your stop would have been 105.95. So here's how the trade played out. Your stop loss would have been 105.95, which would have been right here. It would appear that you lost the trade, but there's one thing you have to remember that I teach, and this is very, very important that you know this, especially if you're catching trades like this. The one thing I want to note here is this huge move up. What is the rule after a big move through the moving averages? You are to take your profits at the first touch of the other band because you know that's a bounce level in the market. For example, over here you have a big push down. What if you would have bought right here? Other than this, by the way, this is my ATC account. My Trader's Way account does not show this because this was a market maker or broker gap. Their spreads were bigger. That's why it shows down here. But on my Trader's Way, it was actually up here. So in all reality, this was a great level to trade. This was actually a confirmed buy. And the one thing that I mentioned in one of the earlier videos is if you bought down here, you would have had to exit right here because it's the first touch of the upper band after a big crash. anytime you are in a trade in the market and it's the first touch after a major move like this, huge candles through the bands, the first touch is going to be your bounce level 90% of the time. So you need to get out of your trade here. So if you would have gotten out of the trade, you would have got pretty much a break-even stop. Your level would have been right here, which was right in between the two bars. So this was a break-even trade. If you would have not had that information, what you would have probably done is set your 2-bar stop and got stopped out, which is exactly what happens. So that's why it's very, very crucial to remember this rule about your big candle pushes through your moving averages. Again, 90% of the time, after huge candles through the moving averages, either way, it doesn't matter. The first touch is going to cause a reaction. So because you know that information, if you are in a trade like this, get out of the trade. That's why I'm not a really big fan of catching big moves like this into support or crashes, because I know if it doesn't turn around immediately, my profit is going to be very minimal. So what I would have liked to see up on this level here is a move up, pull back, move up, pull back, and then into the level. That would have been fantastic because you've already hit the lower band a couple times or even one time. So my chances of it continuing down through the lower band is going to be much greater because you don't have to worry about the first touch rule. So make sure you keep that in mind if you're trading a crash like this or like this, because it will save you from getting stopped out many times. And if you're new, you may want to actually avoid these altogether. But again, make sure you're being mindful of the first touch of the other band rule. Otherwise, you may be getting stopped out a little bit more often than what you should. So that was the odd New Zealand 30-minute trade setup. Now, what's likely to happen is because this is such a major level in the market, it may actually come back down to this level and then bounce back off of that. So we'll see. But that's the most probable scenario here if it does come back that far. Because, again, like I said, this is a major pivot in the market, and we've actually broken through it. So you may find this as support up here. But anyway, going on to the next trade. I've got quite a few, so we got to get going here. But the Pound New Zealand 5-minute chart. This was a trade that set up last night during the Asia session. In fact, one of the ladies in the group actually alerted me about it, but I was actually out grabbing food, so I missed the trade. But going to the Pound New Zealand chart, let's take a look here. First of all, you're going to see this big move, big pullback off of this level. So this was obviously going to be an area of interest, but let's pull it up on the 5-minute time frame. Okay, so if you go to the 5-minute time frame, this is what you got. You get a double top right here with a huge move off the level. You agree this is a double top, big move off the other side to the other side of the screen. So this is a very big area to watch in the market when it comes back, because you're going to have a lot of sellers positioned up there. So where did it hit my level at? It hit it right here. At this point in time, let me set it up the way it was. It was about half, 1.5, 2.5, 3.5. It was right at 4 bars away from that moving average. So I know that on other people's charts, of course, depending on your screen size, it'll vary a little bit. Somebody else told me it was like 5 or 6 bars away. So as long as you've got 4 bars on a double top, you're good. So your entry was right here. It kind of messed around for a little bit, and then it came down, and it dropped 1, 2, 3 bars, which would have been 83.63 all the way down to 82.51. So it actually went about 110 pips of profit on this one. Again, the rule is get out of part of your trade after you drop 2 bars. Your 2 bars would have been 1, 2 right here, which would have been this level, and also confluence of this moving average. So make sure you get out of half of your position right here. And the other thing I want to note on this, you had this is a pretty big candle through support or through the lower band. This is a little more obvious over here, but nonetheless, it came back to the other side. It tested it, and then it came back just a little bit lower, and then that's when it continued to go up, and it just consolidated there. If for some reason you didn't get out when there's 2 or 3 bars, you would have definitely wanted to get out over here, because you are now consolidating at a high. Anytime you consolidate at a high, it's a very good indication that the market may be getting ready to break out. And if you scroll in time, you had a massive breakout. And this was the pound news that came out last night. I don't know what time this was because this is when all the pound pairs set up. This was at 14, so this was 7 a.m. Yeah, 7 a.m. Eastern Standard Time. So, but anyway, again, you have a double top here. You have 4 bars away from the moving average, so this is an acceptable trade to take. Now, the other thing that I want to note here is this. When you came up into this level, take a look. I have my trend line drawn here. Now, let me draw one down here on the MACD. I guess that's not going to work. Let's try it again. You have major divergence. You got a high here, high on the MACD, a higher high, a lower high on MACD, and an even higher high and a lower MACD high. So you have a lot of divergence on the 5-minute time frame for the pound New Zealand. And going back up to the 15-minute time frame, I want to show you this too. When you are producing, let's actually scroll off of this chart to get rid of that big move so you can see it better here. When you go to the 15-minute time frame, what do you have here? This is your move right here. Pay close attention. This is your move up into resistance. Big move up. Now, at that same time, let's draw our little line here, right here. And then let's draw it over here at the highs. What you're going to notice is these final pushes up, especially this last push up here. THV was dropping like a rock and it turned red. This is a really, really big indication that there is divergence. This is THV divergence, this little red line. Price moving up here, the red line dropping. This is a very big indication that there's something wrong and it wants to fall. So let's actually draw this at the beginning. Well, that's not going to work. I think that's about it. About there. This entire last push up, THV was red and dropping. This is a big, 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 big flag that there's something wrong. And the fact that you're at resistance here, this is a huge warning sign that this thing may be getting ready to fall. So if you're able to find divergence on the higher time frames like this, and you've got a setup, by all means, you need to take it. This was a very clear trade setup. I don't know how it could honestly be any clearer than what we've got going on here. Let's go back to the offline chart here. Again, you've got a double top, max move. You have, on the M15, you have major divergence on the THV. On the 5-minute, you have MACD divergence. You have it here on the THV as well, but it's very difficult to see. It's really confusing, so I'm not even going to point it out really or talk about it. But good enough. You had the MACD divergence up here. You had the 15-minute higher time frame divergence as well. The other thing that I want to note, a lot of times when you get to the top of a run, you are going to see a 3-push move into the top. If you see these, by all means get in. I can't tell you how many times I've seen these pop up in the New York session, and man, they hit that trend line and then they collapse. So you can see that's exactly what happened here. You had one, two, three push up, and then it collapsed down to the moving average, bounced off just slightly, and then collapsed a little bit lower before the reversal back up. But if you see these 3 pushes to the highs like this, into resistance like that, or even into support, make sure you jump on that, because that's a really strong indication that it's getting ready to reverse. This happens a lot at the top or bottom of a move. So, but this is the pound New Zealand. Again, you had a lot of things telling you to sell this. You had the 3 pushes up. You even had the S1 level near the highs. You had the double top, max move, divergence on the MACD. You had divergence on the 15-minute. So there was a lot of things telling you to get into this trade short. I really thought because this was such a dramatic move off, we'd have a bigger move than this. But again, the pound news kind of ruined it. But you can tell even before the pound news, there was something going on here. There was either major pound strength coming in, or there was going to be major New Zealand weakness coming in, because you are literally sitting at the highs. Anytime you consolidate at the highs at a resistance level, that is a sure sign that it's getting ready to break. Especially in an active session, and not so much of the London close time frame, because that's your reversal time. But in an active market, you're going to find that consolidations at a high, at a resistance level, will often produce another push up So especially once it hits this moving average. So keep that in mind. That is why when I get into a trade like this, if it does not go to where I want it to go in 8 to 12 bars, I get out because that's consolidation, and it's a pretty good sign that it may want to go up higher. So keep that in mind when you're making a trade. You know, if it was to jump in here and it goes 1, 2, 3, 4, 5, 6, 7, 8 and doesn't go anywhere, get out of your trade. But that's the pound New Zealand trade setup. The next one was a little bit tricky, so I'm going to go over this. Okay, this was the euro pound. Before I had actually went to bed, I said to watch this level. This is a very good level. This is kind of like a double bottom, as long as you're at a max move. So let's scroll back in time here. Okay, this is what the charts looked like when this thing set up. At the time, you were about half, 1.5, 2.5, 3.5, 4, about 4.5 bars away. So it was acceptable. Again, on a double bottom or double top, make sure that you're at least 4 bars away from the moving average. And in this case, we did. Now on my chart, you're going to see that 85.05, 85.32, it was 27 pips difference on the bars. So 27 times 2, 54 pips was your stop loss from the low. The low right here is 82.997. Let's do 83 to round up. 8,300 minus 54. Your stop loss should have been at 82.46 based off of my settings. Now, you may have different settings than me, and this was a very, very close call. So it is possible that you got stopped out. I know one person did take the trade and they got stopped out by just a few pips. But you could have gotten stopped out because the low on this was 82.50. So you were literally like, I was 4 pips away from getting stopped out if I would have taken the trade. And some people did get stopped out. When you have a trade this close to being stopped out, some of you may, like I may have gotten stopped out and maybe some of you did not get stopped out. And in this case, it worked vice versa. But at any rate, over time, the differences in your setups, your profits aren't going to be that much different than mine because, like I said, sometimes I'll get stopped out on something this close and you won't, and vice versa. So, but at any rate, on my chart, this was a winning trade because what happened was we hit the level, we came a few pips from the stop, then it reversed back up. Again, 54 pips was the 2 bars, so you would have wanted to take profit off at 83.54. The high right here was 83.63, so you hit your 2-bar profit target. So at that point, once you hit 83.54, you'd want to put a break-even stop in, and you can see that we have not come back down to this level. So you're still in the trade, or you got out totally if you took the 2-bar take profit as I recommend. Now the other thing that may jump in your mind here is, what about the first touch of the upper band? Okay, this level, the upper band right here would have been the first touch right here. That was 83.53, which was basically the 2-bar take profit. But the one thing that I want to show you, remember, that rule is only if you have a strong close through the moving averages. What happened here? We had a big move down, but it came back up and closed up. So really, you didn't have a strong move and close below the moving average. So your first hit of the moving average rule, in this case, is null and void because you did not. Now, if this would have closed all the way down here and you were still in the trade, as soon as you hit that upper band, I don't care where you're at, get out of the trade because it's probably going to come back down. So, but in this case, we didn't have that because it spiked up immediately. So you don't have to worry about the first hit of the band rule on this one. So that was your Euro Pound trade setup. The rest of them were all pound trades too, so we'll quickly go over them here. You have the pound odd. Well, let's go to our online chart here. You have your pound odd trade setup again. Let me get rid of that. This was your double top region. You could have had 2 entries right there. Let's go to the offline chart. Now going over, this is what your chart looked like at the time of the setup. Your moving average is down here, so you're about 1, 2, 3, 4, about 4.5 bars away from your high. So you could have sold one lot here, two lots here, 75.18 and 75.40. Your average therefore would have been about 75.32 to 75.33 if you put one here and two here. So obviously both of them got filled for news. Your stop loss, 2 bars, 21 to 68, 47 pips per bar. So your stop would have been 47 times 2. So 94 pip stop loss. Your high right here was 75.39. So 75.39. Your stop loss would have been 76.33, which would have been right there. So you see that we went all the way up to 76.11. So we were 22 pips away from the stop. Kind of close, but yet kind of far. That's why, again, I stick to the 2-bar rule. Even in a London stop run, most of the time you're not going to have to worry about it. So, but at any rate, you got filled on this order. Where would you take your profits at? Again, 2 bars, which would have been, was 94 pips. So you'd want to take profit. Let's see, the high is 75.39 minus 94 pips. 74.45 would have been a take profit. 74.45, which was right there. You can see it bounced off of that a little bit, came back down. We're just kind of consolidating right now. But would this qualify? Would you want to get out, though, at the first touch? Well, this is kind of a strong close above the upper band. So this one's kind of tricky. Normally, this wouldn't bother me too much because we're not really too far. Normally, I'd want to see a much stronger close than that. But nonetheless, it may react off the upper band, so you may want to take some off and put a break-even stop, or just exit entirely. Obviously, you can see you did go to the 2 bars. If you would have placed a break-even stop and took off half here, you would have walked away with about 34 was your average. The lower band right here was around 74.70. So you would have made about 60 pips off of this if you would have. And if you would have put a break-even stop on the rest of it, you can see that you would not have gotten stopped out and you would have taken the rest off at 2 bars. So either way, it worked out good. But this one was a little bit tricky because, you know, the size of your candle here was pretty big, but yet it didn't close too far above the upper band. So it may or may not have reacted off the lower band. Again, it's kind of, to be safe, I probably would have taken half off, though, to be honest, and to put a break-even stop on the rest of it, because you definitely don't want to put yourself in a position to get stopped out in a case like that. So, but anyway, it worked either way. So that was your pound odd trade setup. The next one was the pound CAD. Okay, pound CAD trade setup. This one was the best one. This is why a lot of times if I get multiple setups on the same currency pair, I like to take all of them, but yet at a smaller amount. Because, for example, the pound odd level came a little sooner than the pound CAD. So your entry was not as optimal as what you have on the pound CAD setup. So this trade right here barely had any drawdown. So therefore you made a lot more pips on this trade. So your entry was, let's see, your actual high. There you go. There's your wick high, and these are your candle highs. So your entries were 73.98 and 74.13. The high on this was 74.18. So you had about 5 pips of drawdown on the position here, but you can see that it immediately retraced back down. Again, this was a strong move through the upper band, but not a real big close, so I'm not real concerned about the first touch. But even if you would have taken profit at the first touch, you would have went from 74.13. The first touch would have been 72.64. So you're still looking at about 130, 140 pips? No. About 150 pips, even at the first band here. Which would have been about 3 bars of profit. So even So you should have taken probably part of your position off at 2 bars, and then you could have taken some more 3. And you can see this actually went 1, 2, 3, 4, 5, 6 bars of profit so far. And who knows, it could continue to drop. But this was definitely the best one of all the CAD pairs to be trading because, again, you had no drawdown, essentially. And, again, you were 1, 2, 3, 4, 5, 6, 7 bars away from the moving average. So this was a really, really nice trade setup, really nice level to get into the market. Again, it was a double top, max move, had everything you could really desire. But again, it came back very quickly, so that's why you were able to get a lot of money out of it. Now, if this would have closed up here and your upper band would have been like right up here when it touched, get out of the market totally. I don't care if you've only got 10 pips of profit, get out because you know it's going to bounce and continue higher. So that's the pound CAD setup on the 15-minute time frame. The next one here is going to be your pound franc. This one's set up too. Another. This was pretty good. The only problem I see here is the move off of the high was not real significant. Again, my rule is half of a screen. We went about half a screen and came back up. So this was a bit more dangerous than the pound CAD. Pound CAD, you went about 3/4 of a screen. See the difference here? So the pound CAD was actually a much better setup than that one was. So if you were to skip one of the two, which one would it be? Hopefully you say the pound franc because the pullback was not as strong, so this level is not as good. But at any rate, you had a double top. You had the daily R2 up here, so this is your area to get in right up here. This level right here. Again, you were nowhere near your 2-bar stop loss. In this case, you went not even a full bar. So you were pretty far away from your stop loss on this. And then again, you see not a strong close above the moving average. So you don't have to worry about the first bar rule or the first touch of the moving average rule. Not a big deal here. But at any rate, you can see that this went 1, 2, about 3 bars. So again, I usually take off half or the entire position after 2 bars. It came down really nicely here. And it's just consolidating now. But again, 2-bar stop, and you should have had 2 to 3 bars of reward on this if you were able to catch the trade. But again, double top, 1, 2, 3, 4, about 4 bars, so it was acceptable to get into. Again, the only thing I don't like here is the fact that the pullback was not real strong. So just be mindful of that. The deeper this pullback here before the retest, the better off the level is going to be up here. The next one is the one that's set up in the New York session. This is the Euro Cad setup H1. Again, I had mentioned this trade setup last night before I went to bed. Because you had a bottom down here. These were your 2 levels. You had 43 essentially and 42.88. The one thing that I did note about this trade, though, is we've been down here 1, 2, 3, 4 several times before. So that's going to add a little bit of risk to your trade here. So you've been very cautious. For that reason, I probably wouldn't look to take this in the London session. But luckily, this set up in the New York. I did not grab it, which is kind of funny because I noticed the trade right here. This candle right here. Literally 2 candles after we hit this level, the daily S3 level. Or no, not, that wasn't daily S3, never mind. This level right here. Literally a few minutes too late on the order, so I actually didn't get into it. But we saw it spike up pretty quick, and I did mention that we hit the first target right up here. You did see it pull back a little bit. It's trying to go back up, so we'll see what happens here. The lower band is trying to curl up here, so but again, big move down. The first hit of the upper band is likely to produce a reaction back down. This is the London close, though, so it's less likely just to hit it and then crash. So because it is 3 o'clock in the afternoon right now, Eastern Standard Time, so what you're probably going to see is a hit of this and just kind of like bounce around for a while, and who knows what it'll do tonight. But at any rate, you hit your first target here, so you should have taken half off if you got into it, and I don't think anybody did, unfortunately, because like I said, I did catch it a little bit too late, even though I did mention it last night in the group before I went to bed. So, but that was a Euro Cad. Again, why was it a good trade setup? You have a low down here. You had 1, 2, 3, 4, 5. This was 5 bars down here, so you were able to take part of a position here. Actually, let me draw the line here. right here. Right here was your cross. 1, 2, 3, 4. This was 5 bars right here. That was 5 bars. So you can see that your entry was, your range was right there. So you did get in the first order. Again, this is why stagger orders. You don't always get into the second order, especially London close, because a lot of times London close, they won't quite go to the level, but a lot of times in the actual London session, it'll go beyond the level just a little bit, as you saw with the pound pairs that I went over a little bit ago. But at any rate, you did hit it first level, and then you did bounce back up. You went about 2 bars, and that's where I said your first take profit was getting hit right here, and we came down a little bit, and now we're just going nowhere. So, but again, 4th or 5th hit to the lows is additional risk. I absolutely will not take those in London because a lot of times those will break through. Even in Asia, a lot of times those will break through if you're working with an AUD New Zealand or yen pair, so you got to be very careful. With the New York session, a breakthrough like this after a big move is less likely, but you still need to be careful of the fact that it went 4 bars down here already. So, but at any rate, I did miss the trade. I was going to get into it, but I did miss it by a couple bars. But again, another winner here. So last night and today was actually very, very good. We had many, many setups. Hopefully some of you guys caught some of them, but if not, very much a learning environment for sure. And the last thing I want to go over is the dollar CAD, because I did have a couple questions about this. So you will notice yesterday in the chat that I had dropped this picture right here. 1, 2, 3, 4. I had mentioned this is possible it could fail because this was the 4th hit. You can see it bounce just a little bit off the moving average, or off the trend line here, and we're just dropping. So again, this is why you have to watch the 4th hit of any level, because a lot of times that's the breaking point. So you can see that it did close below it. Relatively strong close, and then we hit the upper band, and then we're falling some more here. So who knows how far this could go. This could actually go pretty far, because if you look at your daily, you get your THG both trying to cross down and turn right. So this actually has the ability to drop really far. Going to the weekly chart here, I know I got tons of lines here. What's actually happening on the weekly chart, take note of this pattern. This pattern shows up a lot, and this is a really good indication something's going on. If you have a consolidation below the major moving average, a lot of times what will happen is it'll continue to move. Again, this is a bear flag pattern. You have a big push down. Now you've got a consolidation. THV is trying to turn red. It may still try to go up and tag it, but if this thing does not break through this soon, you're talking about a pretty significant drop. It could literally come all the way down here. This thing could drop another 1,000 pips. Would not surprise me at all. So this is something to keep on your radar. Keep watch here, but the USD CAD could really, really collapse pretty heavily here. And if that happens, let me show you this. The New Zealand CAD, this is the thing I was mentioning not too long ago to watch. 1, 2, 3, 4 hits to the high kind of concerned me, but nonetheless, it was a daily level. And you can see that the level was right up here. I know there were some people that took this trade regardless of it being a 4th hit, and some of you grabbed it up here. So some of you right now are up about 220, 230 pips on this. So it's working out very nicely, and we are pretty much at first target here. So, but again, like I said, if this USD CAD rolls over, this thing is going to collapse. And then also on the New Zealand dollar, let me show you this right here. This has the ability to collapse as well. And if New Zealand collapses and the CAD collapses, you are talking about an epic fall on New Zealand CAD. So that trade could actually go hundreds and hundreds and hundreds of pips. But this is looking pretty heavy up here again. You've got your nice little, this is the line that I drew for Brexit. This was the Brexit high. And then you had a 1-2 bar push down. And then it's taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Basically like 13 or 14 days to retrace this move. Anytime you have a slow retracement after a big move like this is indication of a lot of weakness in the market, because if this would have blew up right back up to the highs, that would have been an indication there's a lot of sellers or buyers jumping in, but this was not the case. So this told me that there's a lot of weakness here, and this THV is trying to turn red again here. So if this happens, you're talking divergence on THV, and you've got your trend line here, so this could get pretty ugly. So New Zealand actually has a chance of rolling over pretty hard here. We'll see what happens in the future here, but New Zealand Cad could actually play out very nicely here. So what is likely to happen next is you're going to see this upper band begin to curl down with a strong close below. So what's probably going to happen is you're going to get a retest of the upper band and then a continued move down. So I may or may not decide to get into the market at a retest of the upper band. We'll see here, but just keep the New Zealand Cad on the radar. Again, if you want to get really good at trading, just kind of watch the setups, the time frames, everything that's going on here like I'm showing you, and it'll really open up to you, and you're going to learn a lot of things here. So, but I just wanted to briefly go over the Cad and the New Zealand dollar. But as far as this Cad setup here, somebody asked me if this was a level to trade, so let me go over it. This looks like a pretty good level to trade off of, but again, before you get into a trade, make sure you're going left a little bit. So take your chart left about half a screen, and you see you have lower levels. So for that reason, this is an okay level, but not a good level. So I would probably avoid it. It did breach below it just a little bit, and it's trying to move back up here. The other thing to mention that I want to mention here is 1, 2, you're only 3 bars from the moving average. So this is disqualified because for a single low, you need 5 bars. So you're too close to the moving average, and you've got lower levels. So this is not a good tradable level. Going up to the 1 hour time frame, I had somebody else ask me, is this a good level? I was watching this level on the 30-minute because there was nothing left of it for quite a ways. If we would have came down into this level, here, let me go to the offline chart so I can show you this a little bit better. Okay. I was watching this level right here. If we would have bounced up here and came down to this level, I would have been buying this all day long. Or maybe we went up here and then we came back down. As long as this level is seen on my 30-minute time frame, like now it's too late. It's too late now. You can't see it, so you can't trade it based off the 30-minute. But if at any point before it went off my screen, this level right here, if at any point it was still visible, I would have taken a buy off of this level as long as I was at a max move, but it did not happen because this is a major double bottom level and this would have held up very nicely. So this was something I was watching on the 30-minute. The other thing here, let me pull up this. Even better was the 15-minute. So let's go to the 15-minute time frame here. Going to the 15-minute time frame. Okay. I was watching it on the 15-minute time frame also. If this would have come up and then came back to retest my level right here at a max move, 4 bars for a double bottom or better, I would have jumped in all day. It would have been a great trade setup. But it didn't. It took too long on the 15. It disappeared. You can't see it, so you can't trade it anymore. Same thing for the 30-minute. You can't see it anymore, so you can't trade that level off of the 30, off the 15. So you can't trade it off the 15 now. You can't trade it off the 30-minute now. However, you can trade it off of the 1 hour time frame if it comes down here at a max move. A double bottom, you need 4 bars. 1, 2, 3, 4, 5. We're 5.5 bars, so it's going to have to do it pretty quick. The only problem here is if you scroll back, again, you've got lower levels. So now this is not a good level because you have lower levels just to the left of your chart. It's not really isolated like I'd like it to be. So if we do come down to this level, I am probably not going to take the trade. The only way I would take a trade off of this level, with there being a level that close on the left, would be the London close, because London close is notorious for a reversal. So if it hits in London or Asia, I am not taking the trade, okay? And by the time it gets to the London close tomorrow, this moving average is going to be like all the way down to here. So it's going to be too close to take the trade. So this is going to be a no-go level, but at one time this was a great tradable level on the 30-minute because it was very isolated. There it is. Nothing to the left. And then on the 15-minute, it was even more isolated. So it was good on the 15, it was good on the 30, but now it's no longer good on the 1 hour because, again, we have lower levels. So hopefully you can see how this big puzzle is coming together here, but I did want to go over the USD CAD because there's a lot of questions on the levels there on this. Hopefully that cleared everything up. But if you are still confused about any of these trades that I've went over, go ahead and get at me. Send me a private message or whatever you got to do to get a hold of me so I can make sure that you understand what's going on here. So, but that's today's video. Hopefully you learned something new today, and I will see you in the next video.